What's going on, guys? Chad here. Just want to give a lengthy update. This is probably one of my most important updates, I think. I can't get this off my mind. I can't shut my brain off, and unfortunately. And I believe this is one of the most important updates that I've done. Not that anyone is really listening to what I have to say, but I'd just like to get it off my chest because I cannot shut my brain off right now. And originally, my last video, I was talking about the April being one of the best months statistically, which if this was a reverse head and shoulders, that would have been a great month for April, but it's not. Um, the head and shoulders reverse has been invalidated basically. The last chance for a double bottom is 200 points down, 12,600 on the Nasdaq. So if it can't bottom there, look out. That's why I'm saying this is an important update. There's always a saying, sell in May and go away in the stock market, and that could be true for this year. The stock market is oversold, but it's not like majorly oversold. It is, but it could rally and then tank. So it could have a sharp rally and then tank. And I want to go through these charts, all these charts, just to kind of give an update on what is going on with these. GDXJ divided by gold basically broke its uptrend. That means that GDXJ buys less gold, which is not a good sign for gold miners. Dollar's still in an uptrend, like we were talking. GDP's up. I'd make nothing of that because GDP is fake. The cryptos are back following the stock market for now, so they are down. Crude is trying to find support. Is it 100? I don't know, but it is trying to find support to either break higher, break lower back down to the 200-day, which is 85. So it could easily drop down to 85, but there's a lot of support there if you draw a line. So we'll see what happens with crude. It looks toppy to me. And if you look at this uptrend, 85 would actually be a good uh, support level. If you look at this long term, 90, 85 would look good. We will see. I'm not buying crude, but you know, that's it looks like it wants to move lower for the time being. And that would make sense. If the stock market is topping, I would suspect oil to move down with it. But who knows? Bitcoin back down. It got all the way to 48,000. I've always said if it closes above 48,000, we would probably negate this bearish trend. I thought it was going to kind of possibly breaking out of this bearish flag, but now it's back into it. So a close below 36,000 is my number. I would believe it would tank probably to 20,000 or lower if that were the case. And this is a long-term trend line for Bitcoin since 2015. Same story. MACD is crossed. So look out. I know a lot of crypto people buying the dip, and it's almost like a religion. I could be wrong. If Bitcoin closed above 48,000, that would kind of negate that idea, which I've I've already went into that in the last video, but just an update because now Bitcoin is weak. It's following the stock market from what I see, and I think you can, like I mentioned in the last video, I think I overlaid a chart of Tesla over Bitcoin and it looks identical. Maybe I'll do that in another video. Um, Nasdaq looking like crap. You know, it's the last support is at 12,600 and it would be oversold, but if it blows through that, it could easily just tank. Like if you look at this trend line since 2009, it's broken out of this channel and now it's back into it. So I would assume it would find support, not necessarily for a long period of time, but it would find some short-term support in the 9,500 range, which is a big, big drop from here. It would still be an uptrend, even if it hit 9,500, which is quite remarkable. But I would assume the Fed would step in at some point right around here to try to revive this market. They can't afford to have this thing fall to 9,500. That's almost a 50% decline. And that's just getting started. This is Nasdaq divided by the dollar. So because the dollar is in an uptrend, it gives us like a short-term warning sign ahead of the actual Nasdaq, because what it kind of means is that people are going to liquidity, which is dollars, and the dollar's in an uptrend. So this can give us an early warning sign, breaking some trends before the actual market breaks. It basically tells us that there's people exchanging their stocks for dollars. And so this chart is weaker than the actual Nasdaq. Copper is looking weak for now. Definitely an uptrend, but it's not in the best uptrend at this point. It's kind of going sideways since 2021. I mean, it's stuck in this channel between $4 and $5. All-time high is $5. Hit all-time high last February. So, it's still kind of spooky that copper is going up, but it hasn't made a decision at this point. This is now the put call ratio is actually getting at almost an extreme. When it hits this top bar or goes a little higher, generally that's a short-term bottom in the stock market. So we could see one more flushing and then a temporary bottom and then a rally and then another collapse. So we're not like we're kind of in no man's land at this point. This is a head and shoulders pattern, and I'll get into this a little more, but the Fed is raising rates into this head and shoulders, which is extremely dangerous. Like liquidity event, potentially dangerous. But we have to keep in mind that this put call ratio is getting closer and closer to the extremes. It's not at the extreme yet, but it could potentially be viewed as a short-term bottom. It's anyone's guess. This CRB index could correct dramatically. It's gone up like what, 1, 2, 3, 4 out of the last 4 months out of the last 2 years. It's gone down. A red candle. So that's quite significant. It's running into resistance here at the 300 level. I would suspect this to at least pull down to the 220 level or even lower. at this point, which is a big decline in the commodity index, which will question inflation. Okay? We are in a very unique situation where we have like 1970 style inflation, but a 2008 style bubble. And so it's very fragile, and basically the Fed is trying to wipe out debt with inflation being lower, or excuse me, higher, inflation being higher than the real interest rate, so that the debt eventually erodes itself. But we're to the point where we're the inflation is so extreme that it's kind of wiping out the middle class, and um, any balancing act of that is going to create some serious volatility in my mind. And we're to that point. It's pretty extreme. This is the DRV, the housing, the real estate bear. Again, last video I said that this was an opportunity. It has to close above 50, has not, and it's gone way lower. So the one thing is if we look at the home builders, XHB, major downtrend, down like 30%. So we got to look at that. That may be an early warning sign that this thing's ready to tank, real estate. And it makes sense that it would tank. But before you know, confirmation, we want to see this thing close above 50 to even touch this. You don't want to touch this unless it goes above 50. And the reason is because look at this thing. It's just in a major, major downtrend. And it's terrible. It's a terrible investment. It's just a trade. And potentially it could turn into a bull market when time comes. So if real estate is in a downtrend, this thing could actually be in a sustained uptrend. Just for now, it's been in a vicious downtrend, as we talked about in the last video. Ethereum, I mean, looks okay to me. It's definitely correcting following the stock market. Close below like 2,700, 2,600 would be significant enough to put that into a major downtrend. But for now, we're good. The gold miners, again, I'm not a fan right now, but it is oversold. Well, it's neutral. Oversold would be in this negative 30. So we would watch for that maybe for a buy, but for now, a liquidity event or a stock collapse is probably going to bring down everything. And part of it's because they manipulate precious metals on purpose every morning at 7:30. Shout out to Ross and Benham. Gold is looking okay. It makes me nervous at this point. 1920 really has to hold. The next level that we may visit is 1880, and then in the 1840s. So, they've manipulated this thing down in the mornings, and it's obvious every single morning at 7:30 they smash the market. It hit 2000 last week, and I was talking to some people that watch, they're going to slam it, and they did. They hammered it. And now they got their downtrend. They're painting these charts, and they may get this sucker down to 1860, 1840. First level is 1880 to watch. We will see. It's still in an uptrend, but gold is still in an uptrend, but and it's dang near its all-time high. It just needs some work. Can they knock it down? Yes. We will see, though. Again, 1872 would be good support. GLD is the short-term chart. Look at that. It's dang close to the support. So if this breaks, if they crash this thing Monday, it's going down. I would suspect they will crash it. This is gold divided by the Dow Jones World Index. Great uptrend. Despite gold struggling a little bit and them knocking gold down, it's moving up that ratio. So it's like a triple bottom basically. Any close above like 475 would be extremely bullish. Um, this is gold divided by the HUI, which just gold divided by mining stocks, and it's kind of in no man's land at this point. It's got to break out. Um, Gold divided by the Dow Jones, again, doing okay. It's moving up, but as you can see, it's like making these series of bottoms, and so I don't know if it's going to come back down or just keep going up. I would suspect even if the gold goes down, the Dow Jones goes down faster, which would mean that this ratio would actually creep up. That means that gold is outperforming the stock market. That's important. Gold silver ratio is tipping back up, which is interesting. 85 seems to be 2003, 2009, 2015. We had a slight breakout in 2020, and it appears that this 85 level is significant. So if it gets to 85, swap your gold for silver, I guess. This is interesting. Gold divided by bonds. Gold is outperforming bonds for the first time since 2011. That's huge because bonds are the safety. You know, they're the asset that people go to for safety, US bonds. And it's the largest market in the world, I believe. And it's worth looking at that, gold is outperforming the bonds. So what safe haven is taking over right now? The dollar and gold. Bonds are doing terrible. Now, why is that? Is it because people are cashing out of their stocks and turning them into dollars, therefore bidding up the dollar? Um, or is it the bond market that's people are buying dollars because they think the bond market is the higher interest rates are going to strengthen the dollar? My guess is a little bit of both, but in the end, the dollar's not gonna be worth much. They will print that thing into oblivion at some point, but it will definitely take time. It takes a lot of time, and that's one lesson that I have learned, that things take a lot longer to play out than anyone could imagine. Gold divided by oil. Now oil's outperforming gold. Gold divided by foreign currencies. That chart looks better than the gold price in dollars. Um, HUI. The gold stocks are down 3.72% this month. Um, so not looking the hottest. Here's the Dow Jones. This is short-term support. I would expect a bounce here, but if it blows through there, well, look out. Long-term chart or daily chart of the the Dow Jones. Kind of just trying to figure out where it's going to go next. This was a chance to move higher, and it ran into a brick wall. This is a decent amount of damage in this chart. To get back above 35,250 would be hard at this point. There's a lot of resistance there at this point, and it's struggling. That's why I'm making this video. It's important to look at this because, I'm sorry this might be boring, but this is important. I believe it is anyways. Maybe I'm wrong, but this is something to look at because all these markets are struggling. Look at this megaphone, and this is a break out of that megaphone, and then support, and you can see this thing riding this trend line, so it means something. So a break below that must mean something significant, and it looks like it's breaking down. It really does. So look out. Again, Dow Jones divided by the dollar is giving us a early warning sign that dollars outperforming every currency, which means that liquidity is needed. Dollar is not a good currency, but liquidity events drive up the dollar. They also have in the past driven up bonds, if that's the right word, and not so the case yet. There's a possibility that we may get one more rally in bonds, but at this point, bonds are not doing so hot, which I will get to in the next few charts. Russell 2000 doing crappy again. Daily chart of the Russell. Here's a 5-minute LIBOR going up. This is the stocks above the 200-day. These are oversold levels at all these lines. So if this could be an oversold point, but it could get oversold here or here. So look out. Still has more to go, potentially. And the advanced decline line is breaking down. New highs, new lows. Again, this could be close to a bottom, temporary, short-term bottom. Same thing, longer term perspective. These are spike lows, so we could get all the way down to here at some point where it's extremely oversold. But look at this, 2008, 2009. Look at that sucker. It's possible that it could get down to there. This is the biggest bubble in my eyes that we've ever had. So it's a big deal. Again, this megaphone pattern broken out of the megaphone, rounding top, starting to break back into that channel, and MACD is crossed on the monthly chart, bearish. Assume this thing cracks. Major support at 8,000. That's a half, 50% lower. Silver, not looking so hot. Don't like the chart. The premiums on silver are dramatic, so there's some shenanigans going on in the silver market, as we always speak about. It's manipulated. they're kicking out everybody that they possibly can in the silver market. And the contract expires next Friday, this Friday, the 6th, I believe, or the 5th. So look out. They will slam silver as much as they can till the 5th or the 6th. I don't know why the regulators can't see that. Every option expiration of both precious metals always collapses both metals. I think the last one was March 27th or 28th. We talked about that, and gold got slammed. That was when the gold contract got done. So it is what it is. I wish I could do something or say something more positive about that, but that's just the way the banks manipulate gold and silver. It's a political metal. Um, Here's the S&P again tanking. Some people would have thought this was reverse head and shoulders. Not the case. It kind of negated that right here and started to move down. This head and shoulders already through, so assume that's about a 400-point move from so 4,000 would be the move down from that. Expect that to happen soon, which is probably another 5% or so, which is a big deal. I mean, that's a big move. Yeah, none of these charts look good. They look like crap. Even the gold and silver charts look like crap too. Again, this is the megaphone. It could potentially find a bounce at 4,200, but I would suspect at least a collapse to 4,000 and then maybe a bounce back up to 4,200. No guarantees, of course. Take what I say with a grain of salt. TED spread, don't really care about that. Theta. Transportation index just flatlining since November, really. Still in an uptrend to a degree. It would have to go below 14,000 to do some major damage, but on the weekly chart, it's already below trend. Um, Taking that out. The U.S. bond market. This is what we were talking about in the last video. It was up to the 160. We talked about 150 being the close that would basically conclude the end of the bond market. Again, I would expect possibly another rally if the stock market goes, and flight to safety would be bonds potentially, but we will see. They may go into gold more than bonds. Like I said, what are you going to go into? Even if it's manipulated, physical gold or US bonds that are printed into oblivion. Probably a little bit of both. But there's potential that people will buy gold as the ultimate safe haven. We will see what Bitcoin does at this point. It should be rallying given the circumstances that's going on in the world, but so far it is not. I would assume Bitcoin needs to close about 48,000 to negate the downtrend, and stay above 36,000 to tread water. Dollars in a major uptrend. This, if they don't print money, this could go vertical again, like in 2020. Um, it did for like a few days, and then once the Fed announced they were going to print a crap load of money, it just tanked. But still in an uptrend, long-term uptrend since 2008. worst inflation ever, but in an uptrend, which is extremely rare. So look out when the dollar turns down. Look at this move in 2020. Boom. That's probably something like that could happen with the stock market. VIX is moving up. Fear is in the market. Generally the VIX hitting this level would be enough of an overbought situation, but yeah, these spikes in 2020. So if we're hitting a collapse, it will spike like a mother up there. You know, this is where you would sell when the MACD hits up there, the stochastics. Um, so we got room. We got room to move. Oil seems to be flirting at the 100. So we will see if it tanks or not down to like 80. Looks like it wants to go down, but it's hard to say. Blockchain ETF just tanking. So this is GDXJ, not looking so hot. The gold stocks, more or less, need to find a bottom. Real estate, short ETF, again, this is a different one, but it's looking like it's trying to find a bottom. But like I said, you need to verify that by it closing above a certain level. Like in this case, you'd want to see it close above 18 to verify that real estate is topping. It makes sense that real estate was topping, but at the end of the day, the market knows best with numbers. I mean, it's going to do what it's going to do. If they're propping up real estate artificially or whatever, it needs to be, the numbers need to be watched because um, they tell the truth. So, in conclusion, basically, we have a collapsing stock market and it needs to be watched soon because this could tank in May and um, it could start a vicious bear market that cannot be stopped by the Fed. They will have to reverse course, but they're not going to reverse course right away. If they're going to try to save face and pretend like they don't care about a collapsing stock market and asset prices. But at the end of the day, that is their Hail Mary. So look out, protect yourself. Thought I would share these charts. Take care.